All right, we're rolling. Yeah. All right, guys. Que paso? What's going on? This is Hala Pablo. Thanks for tuning in. I want to continue what we talked about the other day in the video for fractal macro triangles for Bitcoin. And today I want to marry them with some Elliott wave and show you how we can calculate to a certain degree where the counter trend within the triangle on wave 3 will top out. And so here I have two macro triangles on Bitcoin. This chart is on the daily. And I have the waves drawn out and enumerated. Here we have the the buying climaxes and the selling climaxes. The buying, of course, is the top of the macro bull market. In this case, this was back in December of 2017. And we have this as point 1, or the beginning of wave 1, coming down to wave 2. Now, these are not Elliott waves. These are basically triangle points of where the price action touched either the macro trend resistance, which would be the top diagonal, or the macro trend support, which would be the bottom diagonal in this case. These can actually be drawn as descending triangles, but I've made them symmetrical here with the rising bottoms, which we had when it bottomed out at point 2. The mitigation on point 4 was slightly higher. So I drew the support line to show that, and that's why we have a slightly rising support line on the macro on the bottom. But I don't want to focus on that. I want to focus on the point between 2 and 3, because that is where we find the macro counter trends within these bear cycles. See, by the time we reach 2, we've already entered in, excuse me, and we've bottomed out in the bear market. So we had that. Now this was yesteryear's. This was the last major cycle that we had, the dual cycle with the top here and then the counter trend on 3, which happened back in 2019. Now this is where we are currently here at 3 in this structure. The top, of course, being point 1, where we had the all-time high back in November of 2021, when Bitcoin reached was it 66,000 or whatever it was, 65,000. Then we had that macro sell-off, which brought us down to the absolute low, which was, remember, when it was like 15,000, 15,500 or whatever it was, 16,000. Well, that's point 2 back in November of 22 when it hit there. So we bottomed out there, and we've since made our way back up to 3 in this macro structure. And like I spoke about in the last video, guys, if you take the top and the bottom, the absolute highest point of 1 and then the absolute lowest point of 2, and you do the midpoint between those points, we arrive at the zero, what's called the 0.5 Fibonacci line, or what I like to call TRM, trading range midpoint. And trading range midpoint is where traditionally if you look at the wave from point 2 to 3, that is usually where the counter trend tops out at, around trading range midpoint. Now this is just Bitcoin, but if you do this, you can go and you can back test this on just about any coin or even stock. You can go into the traditional stocks like the blue chippers, like Disney and Coca-Cola and General Electric and all those, and look that have had cycles since the 1930s or whatever, or the 40s, or whenever they began to be traded on Wall Street. You can go back and back test the Fibonacci, back test the triangles and the Elliott waves and the Wyckoff schematics on those, and see that it's pretty darn accurate. You're never going to get exact cookie cutter replications, but you get them pretty close to where you can, on the macro at least, you can get a good idea of the trajectory of the price action. And when you use it in conjunction with volume spread analysis down here, the volume, the vertical bar volume, you get an even more confidence in your signals as far as the trajectory of the price action. But between points 2 and 3, riding its way up to the 0.5 Fibonacci line, we have what's known as a counter trend. And so this is starting another, it seems to a lot of people as like another bull market, but it's really not a bull market. We're still in the confines of the bear market. Now, if 3 rises above 1, then yes, we would be in a macro bull run. But I contend, and this is where there are differences of opinions depending on the trader and depending on the technical analyst that you speak with. We are still, it depends on who you speak to. Like I said, we can still be considered in a bear market, just in a counter trend of the bear market. And the counter trend tops off at the 3 point within these descending triangles. The top of this obviously is the macro trend resistance. And what I want to talk about is the rising wedge, which is the wave up from 2 to 3. It forms wedges invariably. And this is what I'm saying. If you go back and look at those old stocks, and you could look at the price action of Ethereum, you could look at Matic, you could look at anything that has like a history of, like a long history of at least 2 or 3 cycles, you'll see the rising wedges emerging after these selling climaxes, and climbs up. And then within the rising wedges, you have the points of where the price action bounces off. This would be the micro trend support and resistance within these wedges. And here I just did it for the sake of simplicity. I did it in a blue. We have A, B, C, D, and then that long, the longest wave being from D to E. Now, if you look at traditional wolf wave technical analysis, it's enumerated instead of alphabetized. So you'd have 1, 2, 3, 4, 5, coming up like that. So, but I just did it with letters to differentiate from the points of the macro triangles. So anyway, this was the counter trend rising wedge between 2 and 3 that we saw in the previous dual cycle back in 2019. So look, you have a top here, a bounce off the micro support, comes back up to micro resistance, and here it's usually these waves are like divided a little bit at C, and then it comes back down, briefly touches D, and then it shoots up to the 0.5 Fibonacci, which often will wick up to the macro trend resistance line, and that area there is usually where the counter trend, where the macro counter trend peaks out, and then the wave comes back down to remitigate the prior lows of 2. So it doesn't normally go as deep as 2, but it comes down to this area here, this wave between 3 and 4, and then for that final bounce. And then here at 4 is where we typically see the macro reversals of the next bull, the real bull run, because this wave goes up and it surpasses number 1 of the fractal triangle, and it forms a whole new system, a whole new star system, if you would. So if you think of these as like solar systems, or even galaxies, this is a whole galaxy of systems, of solar systems that comprise, you can call them Elliott waves, solar systems that make up this galaxy. And here we see the price action after 5, it retests 5, and then it breaks through. Basically the price action is going intergalactic at this point, and it forms a whole new galaxy, which culminates at 1, and then we begin that bounce all over again. We see this is fractal format, guys. We see this repeating over and over and over again in fractal form, all the way from the micro and into the macro. It's the same thing with like the way this universe works. I shared this with my group the other day. It's like if you take a super high powerful telescope and you look out as far as you can see, you're going to see moons revolving around planets, right? Planets that have moons, not just ours, but other planets, Jupiter, Saturn, have their moons that orbit. And if you go out even further, you're going to see planets orbiting around the sun, around stars. So that's if you go way, way the heck out there, right? Well, and the same thing if you go inward, you're going to see atoms and molecules. You're going to see electrons orbiting atoms. So it's the same system. It's kind of like, that's the best way I can describe the fractal nature of price action. We see that inherent in the universe. And that's why the Fibonacci numbers jibe, guys. That's why you see Fibonacci, the golden Fibonacci ratios everywhere, not only in the markets, but in science and physics and all that. So, and quantum physics as well. So it just all jibes. And so we see a lot of commonalities. Now, speaking of Fibonacci, let me take this away within these counter trends. I hope I made my point. Hey guys, if you like this content, if you get anything out of this, I try to give it straight up, no nonsense. My promise to you is I don't have sponsors. I don't shill. Everything I talk about, I invest my own money in, and none of it is financial advice, but this is what I do. I do this full time, and if you appreciate this, if you get anything out of this, like, subscription, that would be great. It'd encourage me to make more videos for other traders. But anyway, back to what we were talking about. So in these counter trend rallies between 2 and 3, if you take the fib extension and you go to the bottom, and you come up to the top of this. Remember, we did the A, B, C, D, E up here. This being E, the top, the very top. If you go to the top here, this area right here, and bring it back down to the 2, you're going to see it basically topping out, hitting the 2 fib between the 1618 and the 2 fib, and so that's usually where the counter trend on the 2 wave tops out at. And we could even test it out here on this one. Remember, you go to the bottom, absolute bottom, to the top of the wave here before it goes into the 5. That goes all the way up to the 0.5 Fibonacci. Bring it back down, and again, we have the between the 618 and the 2. Really, it hits the 618. Sometimes it wicks up to the 2, but if you can see right here, let's see. Yeah. This area here is like the general area of where you're going to see the price action arrive at. Let's see, where's my brush? Yeah, this area here, the 618, which is incidentally the golden fib ratio of the universe. And that's where you usually find the counter trends topping out. If you calculate the bounces within the rising wedges from 2 to 4, from 2 to 3, excuse me. See, and then the 618 here again, boom, between the 618 and the 2, which mitigates this area here, the C on the downward. See, if you were to draw out Elliott waves, this would be the ABC coming back down. It's the C wave. It mitigates the C wave. See, A, B, C coming down. See how B mitigates 3? And then here, let's try it on this one. So A, B, C. See how B mitigates 3 here? Actually, B is practically on the 0.5 fib line. Comes a little bit below it, but nothing is precise, nothing is exact. It would be too easy, right? We'd all be super trillionaires. We'd be able to forecast everything 100%. But we get the idea, and these systems work. It's enabled me to trade full time and become very, very profitable over the years in the system. And this is what some of the stuff that I teach in my in my Discord group. So if you're wanting to take your trading up another notch, I would suggest you checking us out. I keep it extremely affordable because I don't really need the money. So I charge $20 a month, but you learn how to fish instead of getting fed bullshit signals from these people. And I found my signals a lot of the times on these other Discord and Telegram groups that they come and take signals, or they get them from bots, and a lot of times people get wrecked on them. I don't feed you signals. I mean, you're welcome to piggyback what I do, but what I do primarily is teach the systems that I use. Wyckoff, VSA, Wolf Wave, Elliott Wave, things like that, and fractal formats. Teach you the fractal nature, price action in conjunction with volume. So anyway, just wanted to show you what I was looking at. So we can expect from here a top out. Let me remove these drawings. A top out of where. See, now you move everything away and it's just naked and beautiful, right? Right. So we've topped out here. Looks like we're topping out. This also, and I'm going to sign off pretty soon because I got stuff to do today. But this predominating supply spike. I don't know if it's going to show up on the. Here, let me get rid of this. It's easier to do it like that. Here, but see this growing demand, whereas I'm sorry, growing supply. Let me see the supply, the red here, growing. Now you can say, hey, the demand is also growing. Well, demand is actually going down, but even more importantly, you got to look at what the price action is doing when supply is growing. Price action is rising, guys. Wouldn't you say? Wouldn't you say? Price action is going up, but we just saw supply going down. Oh, I'm sorry, supply rising too. So this is called correlation in supply and price action. This is a bearish signal. This means that we're starting to top out. That means that there's an end to the party up here somewhere. And I contend it's at the 618 Fibonacci from the 2 wave within the rising wedge of the macro descending triangle fractal. So anyway, if you got anything out of this, I'd appreciate, again, a thumbs up, like, subscription, and yeah, that'll encourage me to make more. All right, guys, I'm going to let you go. I hope this helped. Comment. Tell me what you think. I'll get back with you soon. I'm going to go. I'm going to finish my coffee, and I'm going to play with my kids because I can do that right now. All right, guys, take care, and happy and safe trading. Bye-bye.